All right, guys, today on Investor Army. Should you be rehabbing houses? Should you be keeping rental properties at the top of the market? Or should you be selling them off? We have a great guest on here today. He's an expert, flipped a ton of houses, built a large portfolio. You may know him as the top of the nerds, Mr. Flip Nerd himself, Mike Hambright. How you doing, Mike?
Good, man. Glad to be here.
Yeah, man. Wanted to get you on here for a while, believe it or not. And I'm glad we're going to talk about your business a little bit because people get to see you interview other people all the time. But now it's time to put you on the hot seat and talk about what's going on with your business.
Yeah.
So let's kind of talk about that we're headed towards the top of the market. At least that's where a lot of people think as I travel around. What do you think's the best way to go right now? I know you flipped a lot of houses, but you really like your rental portfolio right now, and you're selling a few off. So let's kind of talk about how the evolution of your business has happened over the past few years. You kind of talked about how we got here.
Yeah, and it's funny now when I look back, it's like it's not just how it's evolved, it's like what will I do next? Like, when you have a little bit of experience, you can start to anticipate how you're going to react in another market change, right?
Yep.
I know you're the same way. So it's like, well, if we get back to like a 2008 to 2011 type market, which I have no idea when that's going to happen in Dallas Fort Worth. It seems like DFW can do no wrong, but yeah, if we get back to that, like I'm going to find a way to stack up a lot more rentals than I did last time because I just, truthfully, I've always taught people when I coach and mentor people, I've always kind of said like, go after cash flow. Don't focus on appreciation. Historically, there's not a lot of appreciation in Dallas, so excuse me, maybe there'll be 2 or 3%, but don't really count on that. Yep. But truthfully, the appreciation has been insane here over the last few years, and it's like now it's like, well, if I had known that in hindsight, what would you do differently? But of course, hindsight is always 2020. So,
so what year did you start flipping houses? Were you pre
2000? The summer of 2008 is when I got started.
That was a good time to start.
Yeah, I mean, honestly, we were naive about it. We knew we wanted to do this, but we weren't really like trying to time the market or anything. Truthfully, most people thought we were crazy for starting in 2008 because the market was taking a downturn, and in DFW here it wasn't nearly as bad as lots of other markets. But a lot of people thought we were crazy. And in hindsight, it was obviously a great time to get in because a lot of the competition's gone, and it was just a different market.
Well, it's probably good you didn't have all that fear put into you, because I think, what do you think? I think a lot of the paranoia about the market crash and all this, fear mongering is for the retail side of things, right? It's not so much for the investors. If you know what you're doing, I know most investors that have been around way before me did better in the crash than. Yeah. I mean, it just depends on what you're doing. Obviously, don't make stupid decisions. But if you have a game plan going in, plus, I mean, the foreclosures and short sales are going to kick back up. So you start flipping houses. You're flipping a lot of houses, right? And you ran a Homevestors franchise for a while, and
so that's one of the ways that I started was buying a franchise. I'm not part of that system anymore, but yeah, that's largely how we got started back in the beginning.
Yeah. So Mike's built a really big business here in DFW. He's actually in our market. So you went on flipping houses, but you were keeping some of them during that time period. Like how did you decide which ones you were keeping, and was it just by chance or by area or by price point?
Yeah, I still kind of follow the same process. So you've got one is if you kind of say if you made a decision on am I going to keep it or not, like the first decision you have to make is can you afford to keep it, right? Sometimes you got to feed the monster, you've got to like pay for your advertising, you got to pay if you have employees or office rent, you got some expenses to cover. And we honestly, even from the beginning, we had an office and we had an admin. Now we have a bigger team, but we've always had overhead. Like we were never at a point where we have no overhead because we've always focused a lot on the lead generation side. So we've always had a marketing expense. We've always had an office. We've always had some staff, at least, which I know is not necessarily how a lot of people get started. But, when we started that way, I mean, part of it was the market and part of it was that we kind of came into it. I mean, we kind of came out of corporate America. And I had run some divisions of businesses before, had teams before. So we weren't looking to dabble. We were looking to kind of go big. And truthfully, our first year in the business, we bought 65 houses with no experience. So, but we've always kind of focused on what I call the machine, like building the machine, running the machine, and trying to run it at. I don't have as much scale as some people, but I feel like operationally we're pretty sound. But yeah, so can you afford to keep it? Because you're going to have some level of overhead. You need to be able to put some money in your pocket. And if we can't afford to keep it, then for me, it was always, does that property fit my rental criteria? Because, if you're talking about here in DFW, like if I buy 3 houses that month and one of them is a $400,000 house in Plano and one of them is a $80,000 or $90,000 house in Garland, like
Yep.
the 80-90 fits my rental profile, but the $300,000 or $400,000 house in the burbs doesn't fit my rental profile, you know? So I
Yeah.
kind of
So
let the like, can I afford to, and then I let the property dictate what I'm going to do with it, because if it fits my rental criteria and I can afford to, then I would like to keep it if I can.
yeah, yeah. So Mike jumped into the business and got hyper aggressive right off the start, guys, and
Yeah.
built an office out, which I think more investors should be doing that, right? So too many people, I think, kind of dip their toe in and kind of, you know, don't fully commit mentally, and then they wonder why they're not being more successful, right? So you kind
Right.
of made that plunge and said, "There's no turning back, so I'm gonna go for it."
Burn the boats.
Burn the boats. There's no sailing home once you burn the boats. So, like personally, the ones I'm keeping are 1990 and newer 4.2 brick houses in quality areas. Is there a certain type of property? Because I know a lot of people, when they start, similar to myself, everything that cash flow, whether it's a 2-1 900 square foot house,
Yeah.
1920 house, we just scooped them up because we're so focused on getting that financial freedom number.
Yeah.
And then you have long-term liabilities. So did you scoop up a bunch and you sold them off, or what's going on right now?
I would say we were a lot less selective, the first 5 years I was in the business than I would be now.
Yep.
And just like what you said, like you look at them and you think, hey, they cash flow really well, but some of those older houses are like, there's just huge maintenance expenses, or for some reason there's just more turnover. If you have we have a couple of, I don't know how, actually off the top of my head, I don't know how many we have, but I know we have some 2 bedrooms. Those turn over a lot more than a 3-2. And so, you have to, I have, when I first started, I was more selective for a period of time. I was just going after what I would call like the B class rental, you know? And part of it was because my property manager at the time didn't really manage more of like what I'll call C class or below. And then over some period of time, I have a mentor here that owns a couple thousand rental properties in Dallas. So you might know him if I told you his name, um, but he started managing my properties, and he's not really a property manager, but he just, over a beer one time, he just said, well, I'll manage those things. So that allowed me to kind of keep keeping C's, because he was more of like a C and maybe even a D class kind of guy.
Yeah.
And so that enabled me to kind of keep the C's. But when I look back now, the B's that I was focused on up front are my best properties, like in terms of cash flow, in terms of appreciation and other things that have happened. Those have been probably our best performing properties.
Okay. So can you kind of break down, like for a new investor, what the difference, in your opinion, from a B to C class property? So,
Yeah. Yeah, I would say, in a B class property, it might be more of a brick home. It might be more of a little less of a working class neighborhood. Like it's not, not quite as rough. There tends to be more appreciation there because there's a lot more probably, and I don't know the percentage, but you just kind of know, probably a higher percentage of home owners in the neighborhood versus like this whole, there's some cities here that like are like 70% rentals, right? I mean, so you kind of know those neighborhoods. Yeah. So, probably more of the higher end suburbs, a little bit higher end of a property you got to pay a little bit more for. So when you look at it, you're like, well, this is going to cash flow a little bit less on a purely kind of what's my PITI, what's my principal interest, taxes and insurance payment, versus my spread on rent. Like the rent, it might appear to be a little bit lower, but when you take out that it has less vacancy and less turnover, then that helps. But the only thing you can do initially is make assumptions on that,
Yeah.
But yeah, it's probably a little bit better quality of a neighborhood, in an area where there's a lot less rentals probably.
Yeah. I mean, it's just everybody's going to be different. So I know a lot of people that went and bought a bunch of houses in low price point markets, but they got 20+% eviction rates,
Right.
and so it's like, you got to kind of think about what you
Yeah.
want to do. So how, like, what is the way you look at what makes a good rental property? I like to ask this to people. Are you looking at it on, if it cash flows $300 a month, that's good for me? Are you looking at the 1% rule? Are you looking at, your ROI? Like how are you
Yeah.
analyzing a rental property that makes it worth one keeping for you?
Historically, I'm kind of looking at, how much it'll cash flow a month, even though and what we've done, and this isn't for everybody, but whenever we can, which has been most of our deals, because these are houses that we generated the lead on. So we're getting it at the deepest price. So I'm not necessarily buying it from somebody else where it's marked up, which there's nothing wrong with that. But it allows us to basically buy them deeper and pay them off faster. So there's really kind of two, there's generally two main schools of thought. Like, I'm going to leverage them as much as I can and like never pay these things off, or I'm going to get them paid off as fast as possible. And our approach has always been we want to get them paid off.
Yep.
So there are very few properties that we put on more than a 15-year note.
Yep.
So now I know that hurts our cash flow in the short term, but it helps us get them paid off faster. So we were always looking for, do they cash flow at least like $300 a month? And I'm using some assumptions on vacancy and maintenance as well. So I'm kind of counting on that. Sometimes people like just assume, I mean, in my experience, when you assume like 7% maintenance and 5% vacancy, like that's too low. I mean, once you had a couple properties and somebody was there for 3 months and you evicted them, and of those 3 months they didn't pay rent 2 of the months, and then you've got a bunch of eviction costs, and then you go in and they did like $10,000 of damage to your house. Like, once you have that happen a couple times, you realize those estimates of like 5 to 10% for maintenance are like way off.
Then you learn about owner financing, so you don't have to
exactly.
So those are pretty good properties. To cash flow $300 on a 15-year note is pretty good. So the argument is, should I put a short-term AM on there, or should I put a long-term AM? And then people say, well, I'm going to do a 30-year, but I'm going to accelerate the payments. But we know what happens. People just don't have the discipline to do so. They just pocket cash flow. So are you taking excess cash flow and throwing them all at one property? Are you doing anything to expedite your pay down on certain properties, or how are you?
Yeah, so we do exactly that. So we kind of get to the end of the year, and if there's like, extra cash flow left from the business after we kind of set stuff aside. It's like basically it's like tax season right now, right? So we're kind of, in fact, we're literally real time here. We meet with our tax advisor tomorrow, and we go through this whole process of, we have a few different legal entities. So we kind of we try to pro forma out how the rest of the year is going to look. And then he tells us what our tax bill is going to be on that. And then we start saying, okay, well, should we do this or should we do that? What can we do before the year is over to try to minimize our tax bill as much as possible? But on our rentals, we tend to, at the end of the year, go pay down debt, pay off some houses. We just kind of look at everything. So because we bought the houses one at a time, we have individual loans on any of our houses. So we don't have like a commercial line or anything like that. So we have individual houses that, might have, hey, there's $8,000 left on this mortgage. Let's just go pay that one off. Or sometimes, sometimes we might have a second lien on some, and we just pay off the second lien, or some of it we might just pay down. So we just kind of look at the lowest hanging fruit, like what's closest to the finish line, and then we typically just start paying those either off or down.
Yeah. Because, a lot of people either go, I'm going to be a rental guy or an owner finance guy. But the problem is, if you have a bunch of notes and you only have notes, and you don't have any free and clear assets or assets with very low balances on them, if the market turns, what happens if there's no jobs anymore and you can't resell your properties, or getting smaller down payments, and you took a bunch of properties back? And so it's always good to have some portion of your portfolio as a rental actual asset.
Yep.
At least that's my take on it. So you were mainly flipping houses for a long time, and you did really well at that. And then you started transitioning. What is your business breakup now? Like, what percentage do you keep versus flip, or so people can have an oversight?
So I would say, we've bought a little over 300 houses in the time I've been doing this. And probably our biggest volume was in the first 5 or 6 years, just because that was the only thing I did. And then as time went by, I started doing coaching and mentoring, and that became a pretty significant business to where my team was doing about 800 houses a year. So it was a pretty significant business. And then we had our rental business, and then I started Flip Nerd. So, I wasn't as pure in terms of like, we're just buying houses. And then I got, I have shiny object syndrome and started doing a whole bunch of other things. But I would say historically, we've probably rehabbed about 2/3 of those, and then wholesaled about 1/3, and then kept maybe 10% total as rentals, a little more than 10%, I guess. Honestly, I haven't really kept a lot of rentals the last few years, just because it's been hard. We bought one last week or a couple weeks back that we kept, but when I look back at that house, I paid maybe 2.5, 3 times for that house than some other rentals I have in the neighborhood. So that's part of it, is me just remembering the good old days. It's hard for me to like pay that much for a rental now. Yeah.
Well, let's talk about that. Depreciation. So, people talk about this buying for, speculating, buying appreciation. but now you've seen that, hey, sometimes it works out, right? So
Yeah.
you wish you could have gone back and held more properties, right?
Oh, for sure, yeah. But of course, now the challenge is you look back and you say, "Wow, there's been massive appreciation here over the last few years that I never counted on, but it's a real thing, and I appreciate that it happened." But then the question is like, is that going to continue to happen, or you don't like from a conservative standpoint, I'm like, yeah, that probably won't continue to happen, even though I hope it does, but I don't want to buy assuming it's going to.
Yeah. So I mean, it's hard to tell because we're like you said, looking back in hindsight, 5 years from now, you may not sell off your properties and people may sit and we may have another crash, right? But
Yeah.
let me ask you this: what do you think as far as so you're making so when you flip a house, you get in the back end of the sale, you can sell it for say 40 grand, or you can finance that and keep it as a rental property. And a lot of people go towards I want a big check.
Right.
But if you take, what do you think? If you take all those checks and you're doing some decent volume, what do you think your opportunity cost is? So say, you're going to make money using that money to run your business as compared to the cash flow and the depreciation and all the benefits from rental properties.
Yeah.
Do you think it's that much different when you take all the extra money and running your business and scaling your business quicker? Or do you think you still would have done better if you kept more of those rentals?
Man, I wish I would have kept more rentals because here's the truth is, as a real estate investor, like once you start doing some volume, and a lot of people when you're getting started, you're just trying to survive, right? Like you want to eat, you want to live in a nicer house, you want to have a nice car. Well, once you get those things, it's like, and everybody's different, but for me, we do a lot of nice things. We like to travel. We have nice things. Don't get me wrong, but we live, I guess, pretty far. We live pretty well below our means. And so what's tended to happen is like I don't need another car. We were just kind of blessed to we live in a house that we love, no plans to move anywhere, and we paid cash for it. I mean, it doesn't really make sense financially, but for us, just peace of mind. It's like, hey, I don't have to worry about this anymore. But once you get to a point, you get above a certain income level, it's like I don't need that money to pay for my life, right? And so what's happened to us is we tend to invest it and start doing other things, or and some of those haven't been the best returns, like outside of real estate. Like that's where we've always made our money. So like if you want to start a website and dump a bunch of money into it, like somebody I know has, like this guy, you could do that. But truthfully, if I had plowed more of that into rentals, I mean, we would be far better off. I would say we've had some awesome years. We've done very well. We've paid the tax man a lot of money, no doubt about it. But my wealth is all, like you said, we might get some really nice paydays from some great wholesales or even some great rehabs. But as soon as you sell that house, you're never going to get another penny from it. And so when I look back, it's like we've had some great years income wise from our business, but our wealth is all in our rentals. It's all tied up in there.
Yeah. So what's your opinion on keeping rentals at the top of the market right now? Or do you think we're at the top of the market in Dallas? I mean, some markets around the country are, everybody's in different spots. So you're going to have to look at your own market, but is the time right now to close on more houses and put more loans on them? Or are you trying to sell off and capture the equity in certain ones that you have, wait till it rides down and buy again? What's kind of your strategy?
Yeah, man, I have no idea. I wish I knew. I would say, where we live in the Dallas market and just in Texas in general, probably there aren't very many better markets. Like I don't want to put anybody else's state down, but the Texas is pretty sound right now, and I just feels like it's going to continue it'll continue to be probably one of the best markets, the Texas markets, to invest in for a long time. If I was in California, it's hard to keep rentals in California generally anyway. I would say, California is like the first shoe to drop usually when the market takes a downturn, right? So, man, I don't know. I think the bigger issue is more of something like at a macroeconomic level. Like, will something happen to the dollar? Will something happen like that is totally out of our control that will make things change dramatically? Truthfully, I think if something were to happen, it would bode well for the property owners, because I think if there's like massive inflation or something, like that's going to benefit rental owners. I'm not an economist. I don't really see deflation happening. And, the one thing that kind of helps me give me some comfort is when I look at the types of properties that I have kept as rentals, like I bought them and I'm in them for well below the build price, like what it would cost to replace that property, And so that gives me some level of comfort that you couldn't even replace that house for what I'm into it for. Maybe even sometimes I'm into it for half of the build price. And so if there is any sort of inflation, and there's don't get, I mean, you know this, especially if you do any rehabbing right now, like I was just talking to my contractor last week and he was just talking to me about materials costs. Like he's like, do you know what it cost me to buy a 4x8 sheet of plywood, 1/2 inch plywood compared to what it did in years past? I mean, it's like some of the stuff is 2, 3, 4 times what it was like 10 years ago. So there's definitely inflation in raw materials.
Yeah. So, I mean, it's a tough call. I mean, everybody's going to have their own opinion on it. The way I look is if you're in a super low price point market, who cares, right? You're not even playing the equity game anyways. It's
right.
House. They're not going to go up enough and they're not going to go down enough. It's going to matter. And then I think here in Dallas, like if you're buying, or in any market, if you're buying nice quality houses in good areas, it can't, I mean, how bad can you get hurt? Plus, if you're going to buy a house and you're planning for your retirement and you're going to keep them for 30 years, you're going to have to ride it through multiple cycles anyways. So it hasn't stopped us from still buying properties. I don't know. I think we're still going up for a while here in Dallas, at least in that 250 and under price point.
Yep, I agree.
Okay, so
they're not, in terms of affordable housing too, they're not building rental grade houses anymore, right? I mean, if you look at all the building that's happening here and probably most parts around the country, like builders don't go to the entry level houses anymore. They're going up to kind of the move up type house because they just can't make money at the low end. And so I think a lot of that puts a lot of pressure on rental. It drives rents up and it drives the values of those properties up because they're not really building them anymore.
And what do you think about all these units that are coming on the market? So there's huge apartment complexes getting built all over DFW and not just in our area. Been to a number of big cities lately. You're seeing the same thing. Do you think they're going to overbuild? Do you think what do you think is going to happen to rent rates for single family once these thousands of units start flooding on the market, which some of them have already started to come on?
Yeah, I mean, I'm not an expert, for sure, but I think builders always have a tendency to overbuild. Like they're thinking the same thing. Like when's the last shoe going to drop? So they're trying to get as many in as they can before the market changes. But yeah, I mean, I think they have a tendency to overbuild. But like in Texas, where we're at, there's just such a massive influx of population coming from the coasts. California people move here and they just can't believe that the cost of housing is a third here of what it is in major markets in California, or maybe even less than that if you're coming from the Bay Area. And so there's a big sucking sound of people moving into Texas. So
yeah, it's definitely not slowing down. That's for sure. So what are you doing to find these deals right now? So I know we're in a tough market and a lot of people have a tough market. Are you doing mass marketing to public sources like MLS? Are you doing tons of offers, or are you going direct to seller? Or what seems to be working for y'all?
Yeah, it's tougher right now. I mean, my model has always been direct to seller. I've out of 300 something deals, we've bought a few off the MLS, and I haven't looked at the MLS to buy. I sell almost everything on the MLS, but I haven't looked at the MLS to buy in probably 8 years. And even then, we just tried, like, let's put in hundreds of offers and see what happens. And it just didn't work out well for us. So I've always gone direct to seller. We do direct mail. We do some pay-per-click stuff. And then just through my network, I probably buy about a third of my houses through my network from other investors or people that I might be coaching or mentoring, or other investors that, we JV on stuff. And so I've always kind of been at about a third of my deals through my network.
Which is what I tell people too. I tell people all the time, referral marketing is where you're going to get some of your biggest and best deals. And people don't want to hear that, but they don't understand the business. We talked about on the podcast earlier, building JV partners up, getting out there. And so you've done a good job doing this. Let's go ahead and transition and talk about Flip Nerd. So when did Flip Nerd get going, and kind of what's going on with that?
Yeah. So, it started, I guess, probably like 2009, 2010. So when I got in the business, and you and I have talked about this a little bit before, it could be a lonely business sometimes if you're not focused on building your network and trying to meet people. It's kind of a lonely business. Like, you're out doing your thing. You're talking to buyers or sellers all day long. You're talking to contractors and title companies, but none of them are like your peers or your friends. They're just like people you're interacting with in the business, but they're not your buddies, right? I mean, and they're not thinking like you, like, I'm trying to achieve financial freedom through real estate investing. Like, I'm a small business owner and I'm trying to figure out how to make this work. So it just gets lonely, you know? So I started for a while. I was pretty involved in some of the REI clubs here. I was a sponsor at one for a while, actually several years. And the problem with that, it was good. I mean, you know, it was fine. The problem with that is the REI club that I was a part of, and most of them have one meeting a month. It was like a general meeting, and it's like, okay, well, what do I do the other 30 days of the month, you know? And so what happened was I started doing something that I called Rehab Live. So we were rehabbing a lot of houses at the time, maybe at the time 5 to 7 houses a month were rehabbing a project. And so what I did was I just started building up my list of investors. You know, I already had my buyers list on there, and I started inviting them to come watch us rehab a house. So they would basically come to the house 3 times. So it's kind of like right at the beginning in all its glory, you know, we try to find a hoarder house, or we always picked out the ones that were like the worst, you know, just because people like to watch that transformation. So we'd kind of pick out the worst house we have right now, or that we just closed on, or maybe we haven't even closed on it yet, but we're about to. Then they would come back like 2 weeks later when we're halfway through with the project, and then come back again about 2 weeks later when we're totally done. And we would just literally sit around the neighborhood. I'd like order a bunch of pizzas and stuff. We'd just kind of sit around and talk about it. And people just had a lot of questions like, why did you do this? Or who did that? Or where did you find that? Or what made you decide to do this versus that? You know, all those sorts of things where we were kind of entertaining people, but I was also building my network out.
Yep.
And then, so that was really kind of the beginning of me taking like networking seriously, right? Was doing those things. And so that was, that probably takes us back like 8 years or so. And then after I did like 8 or 10 of those, I started doing like one a month or one every other month. And I met a lot of people. I met people that I've done lots of deals with. I met, you know, prospective lenders, like definitely people that I could wholesale deals to, like lots of, you know, people in that process. And then I wanted to take it to another level. So I actually hired a video guy that worked for me like full time. So he was doing stuff for us on social media, you know, in the early days, but he was also just kind of following me around, and we would record content and record stuff. So I kind of took that show on the road, which was online, you know. So we were creating little these same rehab live things online and putting it out there. Now in hindsight, I was just like putting it organically in my Facebook feed, or, you know, I wasn't using them as like, you know, opt-in pages. I didn't have like squeeze pages and stuff where we were kind of further building our list. It was just like in hindsight, it was like there's a much better way to do what I did. But anyway, but it kind of took us out to start meeting people more nationally and just people from all over the place. Even though I didn't really know what to do with that, like I was kind of, you know, trying to meet people, but I didn't really have an agenda of why I was trying to do that at the time, really. But then that kind of evolved into the podcast, the Flip Nerd podcast. So, as you know, we recorded episode number 380. So that started, it's hard to believe this, but we started that kind of right at Christmas time. And it'll be 4 years this Christmas coming up here. So hard to believe that's been almost 4 years, but that started as like, I was recording 3 episodes a week, I did that for the first year, which was a ton. And then I went down to 2 for a little while, then went down to 1. But that was the beginning of that show, and then we actually have done a few other shows kind of since then, and there's another one that I'm about to start here. But kind of this main interview show for the Flip Nerd, what I call the Flip Nerd Expert Interview Show, that's been almost 4 years, and that's allowed me to just really grow my network and you know, meet anybody in the real estate space. You know, probably 9 out of 10 of them have been on my show. So.
I mean, it's a great show, guys. Go on over to Flip Nerd on YouTube, hit the red subscribe button, hit the little yellow bell. That's going to notify you when future videos are put out. Also, head on over to iTunes and give Mike a good review. So he's got literally, thousands of videos on your YouTube channel or something like that?
We have. So over time, we've created 3 different shows. Now, that is about to grow, but we have another one called REI Classroom that we recorded about 700 episodes of. That was a daily show for a while, but it was like a 5-minute show where we invited guests on, people like you that would come on and for 5 minutes just share like a tip on X, whatever that might be. So that was just kind of a short form, like lots of like a daily real estate tip type show. Yep. So, and then we had another tip type show for a while that across those 3 shows, I think we have a little bit north of 1,500 episodes. So
that's a lot of videos, guys, and they're all free, right? So you're doing all this, but you've also created your new program that you're putting out, right? I forget.
Yeah, I
You
mean,
got
things
you
have
got
kind of evolved where I definitely have a lot of coaching and mentoring experience, and we have some coaching programs. And then we have a mastermind. So I recently launched a mastermind for people that are actively doing deals. And so it's it's not cheap, but it's the type of like if people that come in there, if they do one deal a year, like it more than pays for itself. And and there's some really high caliber people in the mastermind. So that's called Investor Fuel. But yeah, we've got people in the group that have done over 1,000 deals, and typically we're looking for people that are doing at least a deal or two a month to be considered. And then we also we really we really kind of restrict markets, so we don't want more than one or two people from each market, just because we want people to feel free in kind of sharing what's working for them and not be worried that they're sitting across the table from their competitor in their market. So
Yeah,
yeah.
that's always a tough one with the mastermind. So
Yeah.
when they join like your other consulting, is it tailored to them individually, or do you have is it an online course, or how would that work? And is it
So
mainly
we have a
focused
couple
for?
of different programs. We have like a largely online one that's a little more universal, but then we have some higher dollar programs that are more expensive. That just truthfully, as you kind of go, as the price goes up, there's more one-on-one attention and more kind of customization for them. Yeah, yeah.
Yep.
So the coaching programs are all, not to give a whole bunch of plugs here for myself, but the
That's what.
mastermind is called Investor Fuel, investorfuel.com, and then our coaching programs are generally under the Investor Machine brand, investormachine.com. But yeah, I mean, but you can see everything I'm doing is around building my network, and truthfully, a lot of it now, certainly in the coaching, is like, look, if you join in my program, then I'm going to share my network with you. Like I've got
Exactly.
an amazing Rolodex, if you will. That sounds old when I say Rolodex. Like I'm like, network.
What's a Rolodex?
Yeah, exactly. Yeah. So anyway, but yeah, now it's like I'm sharing my network with other people. As I'm building it, I'm sharing it. I can connect you with people. I would say generally that's probably what I would say is one of my biggest strengths and one of our biggest assets at FlipNerd. We've created all this content, and it's a great place to go learn things. But truthfully, our biggest asset is our network, like just the relationships we have with people like you
Yeah.
and others around the country that I could make a phone call to, and we could do a deal together, or I could say, hey, I really want to introduce you to this person because he wants to know more about what you're doing. And so that's not really what I set out to do. I mean, I set out to grow my network, but never thought that it would be such a powerful asset.
Well, essentially, what you've done is you've created people have been starting REI clubs for forever at brick and
Yeah.
mortar, and you've essentially taken it to the next level and created a national REI club essentially
Yeah.
through your
Yeah, we
social
have
media site.
we have about 100,000 subscribers now on FlipNerd.
Wow.
So yeah, it's growing pretty significantly.
That's a lot. Yeah, that's really good. So, are y'all doing deals with your students nationally or just locally, or is
Locally,
that?
I do. Yeah, I haven't really done much nationally, but based on our discussion here earlier about kind of the virtual JV stuff, it's like, well, I've got a huge list of potential buyers, and we're doing a better and better job of identifying them geographically. So, effectively, there's major markets all over the country where I have a buyer's list of thousands of people in that market
Yeah.
alone. So yeah, it's my wheels are turning a little bit.
Your wife's gonna get mad at me because I put another shiny
She might.
object.
She might.
Don't tell her it's me. So I think you're also selling turnkey rentals, right?
Yeah, we have so through our platform, we help people get connected with some operators in different markets around the country. So that's one thing that's happened is as we kind of built up our network, we just say, how can we help people? And historically, a lot of what I've done is what I would refer to as active investing. Like even if I'm buying rentals, most people that own rentals, they'll kind of give you a sharp elbow if you ever refer to them as passive, because they're not always passive, right?
Yeah.
But most of what I've done is active, and it was just kind of this realization of like people that I mean, right now this is going to sound kind of like, oh duh, but there's a ton of people, as that want to own rentals, but they don't want to go find them like the way that I have. They don't want to be that active investor that's sitting on the couch or at the kitchen table talking to sellers and spending money on lead generation at all. They're willing to just pay for it marked up if the numbers work for them, but they don't want to have to go source that product and go through all that stuff. So when we kind of realized that, hey, there are a lot of people that would that trust us or like us because of our brand and all the information we've shared, that we can connect with operators in other markets that are running a turnkey business, but they don't really focus much on finding buyers as they do to like finding deals and rehabbing them and getting tenants in them. So we built some relationships like that around the country where we help people invest in some Midwestern markets and some Southeastern markets.
And are y'all helping them get financing for this?
Yeah, we do. So we don't make anything on that. I mean, truthfully, the people never pay us. We get paid effectively kind of a referral fee or a marketing fee or a realtor commission equivalent of that from the seller. But we connect them with some lenders and stuff like that we don't get paid on, but it just helps facilitate and helps them get financing. Mm-hmm.
And they can see these properties on flipnerd.com?
Well, we have a website called, it's funny, we have all these different brands, but passiverental.com. Passiverental.com is a website we have where folks can get in touch with us and schedule a call to learn more about how we might be able to kind of help connect them. And so we've vetted out, I don't want to take it lightly, we've vetted out a lot of operators around the country that, they either couldn't find, they say they're a turnkey provider, but they don't have enough inventory to ever sell anything, or there's some problems with them. It turns out they're not a good property manager, which is critical in rentals if you're outsourcing that.
Sure.
And so we've kind of vetted out a lot of different people, and we continue to look for new people too in different markets. But yeah, we think we definitely believe that we add a lot of value by finding those people.
Yeah, because like you said, it's tough to find the right ones. And if you're tied up with your business or whatever you're doing, and you're too busy to get into real estate, turnkey rental properties are a great way to go.
Yeah.
Okay. So guys, I just want to kind of recap what we went over. We're talking about rehabbing houses, how if you're rehabbing houses, you may want to keep more of them. That's a common theme in most real estate investors' life. Coming to the top of the market, I don't think Mike's too worried about it. Neither am I. Guys, if you need help, head on over to Flip Nerd, right? He's got a YouTube channel. He's got podcasts. He's got all sorts of social media stuff out there. They're teaching investors all around the country to be successful. Other than that, Mike, I appreciate you coming on.
Yeah, great to see you, my friend.
Yeah, unless you got one last word of wisdom for our listeners here.
I would say, let me just share something. Yeah, I think, if you're listening to the show and you're not actively investing right now, I think following guys like Connor, following what we're doing on Flipnerd, any of those things, there's a lot of great information, but it all comes down to taking action, right? You got to take action. So as we're kind of going in, we're about to enter 2018. It is incredible to say that. It's hard to believe that it's almost the end of the year. But you got to take action. So if you're following what we're doing here, what we're talking about here, what Connor's talking about, and you see this as an opportunity to achieve financial freedom or, make more money than you're making right now because you deserve more, you got to put in the work. You got to take action. You got to go jump on it. So you can only absorb so much from a learning standpoint, and most of your learning is going to come from kind of on the job training of actually just doing this. So get out there and do it.
Yeah, guys. I mean, you got to get outside that comfort zone. You see this, Mike sees this all the time. People get into this state where they're comfortable with the learning process. They know they can go work 15 hours a day and sit in the privacy of their home, read and listen to podcasts, but that's never going to get you where you need to go. Sometimes the people that just kind of jump out there and they didn't really get any training, but they just kind of figured it out on the way out, figured it out in the field, kind of do better for some reason. But the internet's changed all sorts of ways you can get delivery. I mean, he's talking about he got 1,500 videos out there online, guys. Go check them out. But yeah, definitely get your education in there, but do what he said, dive in and just kind of act first, react later. Because if you're trying to get all your ducks in a row and plan everything out, you're never going to get out of your seat, right?
That's right.
All right, guys. Well, Mike, appreciate you coming on, and guys, we'll see you on the next episode.
Awesome. Thanks, man.